Hi, my name is Sean Wolber, and I'm here with Pat Brody, Senior Director of Integrated Business Management at Abbott Molecular out of Des Plaines. And Pat, can you discuss with us the type of long-lived assets that your company has?
Yeah, we have a lot of different kinds of assets. We have our plants and our property. We have laboratory equipment that's used in R&D. We also have a lot of equipment in our factories, our fill lines, and some of the automated equipment that we use. And we also have instruments, laboratory instruments that are actually in our customers' facilities. But because those instruments are really still owned by Abbott, those assets still show on our books, and we obviously depreciate those every year on our books.
Okay, and then what kind of useful lives do your assets have?
It depends on the asset. So all of our assets are really assigned an asset class according to our accounting procedures. So for example, something like a parking lot would be in an asset class that we would depreciate over about 30 years. Things like R&D equipment, it might depend on the piece of equipment, but a typical piece of R&D equipment is probably depreciated over a 5-year period. A lot of these instruments that we have in our customers' facilities are typically depreciated over about a 7-year period.
Okay, and then what method do you use to depreciate your assets?
Generally, we use a straight line depreciation method. So if we take something like a parking lot that might cost us $1 million to install, we would typically depreciate that using a straight line method over a 30-year period.
Okay.
In some cases, in the first year of the asset's useful life, we depreciate a half year, and then it's a straight line method from there.
All right, and then what is the dollar threshold where your assets are considered too small in value?
Generally, anything under $1,000 is just expensed. So if you were in our laboratories to buy, 4 or 5 pipettes at $100 a piece, we would just expense those, even though those would have a useful life of a couple to 5 years. But generally, anything over $1,000, we fill out what's called an RCE, a request for capital expenditure, and then those assets are purchased with capital funds and then depreciated over the useful life.
All right, and then when are your assets retired?
It depends on the asset. I would say typically an asset's retired when it's no longer usable. So again, in the case of R&D equipment, it's not uncommon for us to purchase an asset and think that it's going to last us, say, 5 years, but because of some technology changes, that asset could become obsolete prior to that. At which point we may make a decision actually to write off that asset, and that would essentially cause us to expense any remaining depreciation on that asset.
All right, and then what types of intangible assets do you own, and are they amortized? Or?
Yeah, it depends. So a lot of times if we do an acquisition, say, of another company, we may spend $100 million or $200 million acquiring another company, and generally associated with that acquisition would be something like goodwill. I'll just use as an example, if there was $20 million of goodwill associated with an acquisition, then that would be an asset that we would have on our books that we'd actually amortize over some period of time.
Okay, and then do you have any research and development costs that are associated with the company?
We do actually. As a technology-rich company, we invest quite heavily in R&D. In fact, most companies in our business would probably invest 9 to 10% of sales back into R&D. Those R&D costs are generally expensed in the year that they're incurred, but in some cases, particularly in our software development areas, some of those expenses we can't amortize in future years. So rather than incur all of that expense, let's say in the year that we do the development work, because of the nature of those products, we're able to amortize those over multiple years going forward.
All right. Well, Pat, thank you for your time.
Okay.
Absolutely.
All right.